Hello fellow option traders, this is Jeff and welcome to the market update for Thursday, May 5th, 2016. Well, alright, just generally overall the economy is just kind of very sluggish and dragging itself along. Earnings season, I guess the best has come and gone. Apple did not fare very well, and a lot of other tech stocks did not, which is why the NASDAQ has been leading the bearish trend at the moment. The other indexes have been trying to fight against it, but I think they pretty much gave up and they're all starting to sink. I don't know what Apple's going to do, but they say that is Facebook the next Apple, or is Google's probably maybe come and gone. I don't know. I think that Elon Musk and his Tesla organization is doing pretty well. Okay, but anyway, here are the announcements for this week, market affecting announcements, and most of them were either at the bottom of their range or missed to the negative side their range. And of particular interest to me anyway, because I always think the whole story is about employment and people having jobs. And all these trade agreements that they've come up with where jobs have been effectively shipped overseas and manufacturers have been shut down here in this country, which is one of the reasons why I think Trump, if he does what he says he's going to do, or even just one or two things, one of them might be to renegotiate or cancel some of these trade agreements, because the big companies just have too much of an advantage with cheap labor overseas and nobody able to work here. I mean, if once manufacturing left here, then the middle class pretty much dissolved and disappeared, and they're trying to get it back by making employers pay $15 an hour for being a French fry manager. Well, I don't know if that's going to cut it or not. I know that I'm not going to pay $7 for a McDonald's hamburger or any fast food hamburger. But, I just don't eat too much fast food anymore being retired. I can make my own food, which is much more satisfying and tastes a hell of a lot better and is much, much more healthy. But back to this ADP employment report. Here we have it. Look at this trend since basically the first of the year. It's been downwards. So these are payroll gains, I believe they are. Consensus was 193 and the actual was 156. And one other thing that we can look at is the jobless claims. How many people are initial jobless claims? In other words, how many people got laid off and filed in the last week? Here it is, 274,000. I've said it before and I'll say it again. This is not a healthy pace. I don't care if everybody says, oh, well, it's way down. It used to be 300,000 and, it used to be up here at 340,000. Well, I don't really think that 270,000 is real healthy either, out of a total population of was it 300 million? So 300,000 is 0.1% of that, I believe, if I got all my decimals correct. And that's how many are being laid off every week. So I just don't think that that's a good thing. It's not a good pace. And there's going to be even more layoffs, as Intel announced some pretty huge layoffs. All right, moving right along, and I think we'll move right along. Where do I want to go now? I think I want to go to Thinkorswim and take a look at the account here. Here is the market today as of 2:52, about 3 o'clock Eastern Time. It was looking positive earlier in the day, and it has been steadily sinking, although the NASDAQ, believe it or not, is up a little bit. The cash index is. The futures are not, but the futures are based on the opening last night, and this is based on the opening this morning. So that would be the difference there. And then the total numbers, 4306, 4312. I don't know what that difference is, why that there's a difference there, but there is. So then the same thing for our friend, the Russell 2000, has been cooperating very nicely. We'll be covering that. And the VIX is currently at 16. I believe last time we did this recording is around 13, maybe a little bit more than 12. And gold's at 1277. Actually went up over 1300, I think, earlier this week. And oil's at 44.30. Still kind of hanging around. Not much change, I don't think, from the last video that I did. And the dollar's at 93.75. That's weaker than the last video that we did. And let's take a look at the account here. Here's the Iron Condor and Russell making a little bit of money today. Still have a theta of $11.50. So that's, all things being the same, if it just sits there and doesn't do anything and doesn't change at all, theta will continue to increase actually as we get closer to expiration. Remember that curve for the value, the intrinsic value of an option, which looks a lot like, kind of starts out flat, and then as we get closer to expiration, it actually kind of accelerates. So that's accelerates in losing its time value. If we were to draw it like that. So eventually it ends up plink down here with 0, with the rapid time decay in the last week of its life for a monthly expiration. For a weekly expiration, a lot of decay in the last couple of hours of the Thursday before the Friday expiration. Alright, so that is that. So theta will tend to increase as time moves on. Same thing, we have just our regular gold straight long call here, which is up $9.50. I believe that Monday or so it was up a couple $100. But I decided to hang in there with it. What's our theta for today? It's not showing on here. Wonder why it doesn't show on there. Okay, probably because of the way it's laid out here. Alright, we'll take a look at it on the analysis tab. And the gold covered call is doing fine. I'm not really going to do anything with that right now. I did sort of a what if. We'll take a look at that. And then we have also Ford here, which is our simulated cover call. And we can jump right over to that if you want to, but I'm going to say let's not for right now, because anything of interest here that we want to take a look at. Tesla's doing really good. Let's pop up some charts here and see how Tesla, I believe Tesla's been doing. Whoa, well, make a liar out of me. Jeez. Tesla is sinking. I thought they had good earnings. Yeah, they were projected to lose 78, and they actually only lost 57. All right. How's Ford doing? Ford is still hanging around where we have a 12 or 13. We have a 13 option on that short call, so we're a little bit in the money, but that's okay. And it's doing really nice. We're pretty happy with that particular simulated trade. I wish I would have done it for real. Apple, let's take a look at that. Yeah, not real good here for Apple. Below $100. I think a lot of people would think that it would never sit below $100 for a very long time. And Baidu also suffering a little bit, apparently from an earnings miss. Just a guess, but looking at things popped up real big here and then they sank. I don't know why that is. I'm just reading the charts. NAVB, my speculative stock here, is right up here, almost back up to what I paid for it. And when it was up here before, I did peel off some of it. I had 1,000 shares, and I did sell some back here. But now we're waiting for it to come back up again. How'd they do on their earnings? Earnings, actual, minus 2 cents. That's pretty good, actually, because here they lost a nickel. So they're starting to claw their way back up. Very expensive business to be in, pharmaceuticals, when you're a little player like these guys. Interested in taking a look at Priceline. I still can't understand why the stock is worth so much. What do we got here? Oh, yeah, they just blew them away. They must have had a poor guidance, maybe, or something. We looked at Tesla. Let's take a look at the VIX. I'm going to take a peek at USO here, too, in a minute. As soon as we get the VIX up. Ta-dum, ta-dum. Waiting for data. All right, here is the VIX clawing its way back up. I wish it would get back into this area. I would really like to see it back up there. And a quick peek at USO. Okay, it's looking pretty good. I had thought about maybe, well, actually I did do a straight call on this. I should have stayed in it, but I didn't. So that's the way that goes. Let's take a look at the Russell, our little darling here, where we have most of our risk is in Russell right now. Here's that trend line that I had drawn a long time ago, pretty much based on the year. I'm going to move this over. There we go. Let's zoom out here. Yeah, here's the trend. Here, this is a channel. This trend line is the same as the top of this channel over here. So we did violate it a little bit, but now it looks like it wants to come back down into it. And we're seeing a lot of weakness over here on the MACD, a lot of negative momentum. Same thing on the weekly over here. Momentum is about to go negative. Stochastic is bent down. Remember, this is our Iron Condor. This is all three of them, and one in each account. So this purple line is going to start to pump up as we get closer to expiration. And if we start to creep in here within our profit zone in here, as we move towards expiration, I think I need to get about $2,000 overall out of this trade. Because if we look at we're down 1109 right now, because when we rolled this we had to buy back the April 1100, 1120, and we rolled that to the May 1100, 1120. So we have how much time to expiration? I need a calendar here. This will tell me up here. We have 2 weeks to expiration. All right, so we need to make at least 1100 off of this trade. So that's what I'm waiting for it to get below that 1100 mark. And then we can make hopefully 1100 on it. And all we need to do is, actually it looks like as though it would be pretty much primed right now if we drop down here to 1073, which would be right in the sweet spot here. And looking at the chart here, we have, let's zoom in a little bit on this. Here's our profit zone here in gray. We're waiting for price to come down here. We have candles not done for this week, and then we have 2 more candles that can form in here, and maybe it'll bring us down here. Maybe this current trend will continue. Maybe. But we'll just see what happens. I tried to tell myself not to lose sleep on this as it was climbing up here. And I said, okay, I'm prepared to take a total loss because I've been burnt and whiplashed so many times. So here we are, we're coming back down, and we may be saved by the bell here, who knows. At least limit the loss. You know, this thing may turn around, who knows, but I think the current environment is there's just too much pressure downward on prices right now. So that is the Russell trade. Let's take a look at the gold trade. So this is hard to look at. But here I have a possible roll from June to July. I don't know why it says not traded. I don't know why. I was going to roll it up. I don't know why this is doing that. There we go. Right now, could collect 27 cents on it. There, check it. I don't want to see it up there. We could collect, if we rolled this right now, 27 cents. Now, that would get us up. It still would be in the money, but at least it would push us out another month. And we can move it up $1 and strike anyway. But I don't think that that's going to really be good enough. But I'm not going to do anything right now. But what if we did do that? Here I have a what if roll June 119 to July 120. And we collect $25. That would bring our total credit back up to 951. The strike would be 120. Our return on investment, unrealized, because we haven't closed this trade out, but that's basically what our credit versus what we paid for the stock. We're up 7.21%, but if we get called out, we'll actually lose 2.05%. Not worried about getting called out on this right now. Maybe after the May expiration, we'll come back and take a look at it, but for right now, I'm not really worried about it. All right, and we'll take a look at the spreadsheet on Ford. Last thing that we did was rolling this June to July. And I sold the July 1613 strike, and we have it over here, plus the dividend that we got on the 27th of last month. We are now, if we get called out, and it's slightly in the money right now, we would have a total gain of 15.54%, but I don't want to be called out. You don't want to be called out on a TD Ameritrade because it costs a lot of money. So you want to either close the trade out or roll it under your control and under your cost, because they'll charge you a fortune to sell your stock and when you get called out. I don't know why they do that. Now, they're interactive brokers. It's practically nothing if you get called out. But I don't particularly like their platform. And they also used to, I don't know if they still do, when you modify an order, they would charge you for it. And I modify orders a lot. I don't need any more extra costs. So per option trade is just a tad more at Thinkorswim than interactive brokers. This is from 3 or 4 years ago, the numbers that I'm throwing out now. As a matter of fact, you can check my blog. It's probably better. Let's not babble on about it here. Just go and check my blog for interactive brokers. Just do a search. And I've done a couple of posts about the differences between the two, because I get a lot of questions on it. All right, so that's where we are with Ford. And that's where we are with RUT. And I think we pretty much covered everything, don't you think? Let's go back to RUT here. Maybe. Okay, there she is. That's what she looks like right now. So we got 2 more candles. Finish this week's and then next week and then the following week. And let's just hope that the downward trend, this little short-term trend here, continues. All right, so right at the 20-minute mark. How great is that? So here we are. That's it for this market update. I hope you enjoyed it. Make sure if you have any questions or you're wondering if you might want to find out about something, to go check my blog, which is www.theoptionguru.com/blog, B-L-O-G. Thank you very much for watching. Have a great day, have a great weekend, and above all, happy trading.